If you look back in history since 2000, all of the best performing funds of all times were the ones that were formed right in the middle of the downturns. 03, 08, 09. These are the vintages that have always been the best. And what that means, it's a proxy for investing, which is it's the hardest time right now. It's when you have the shakiest hand when you're writing the check, but it'll probably be where all of the real money is made, or the real generational wealth, both for the entrepreneurs who have the courage to start and the investors who have the courage to invest.
Hey guys, welcome back to the channel. Today we have Chamath on the In Podcast, giving us the news in stocks, economy, and the financial markets. Chamath believes the market is going to make a hard landing, and with the severe corrections recently, we'll see that sooner than later. Because of all the panic selling, some people think the stock market is about to fall. It is incredible how much value of the global market has been destroyed in the past few months alone, and the financial system is now in danger. People might be saying that the Fed will yield by early 2023, and there is a clear expectation that rate increases will have to occur. The correlation between the stock market and the Fed money printer is becoming more evident, and with the current economic downturn, it looks eerily similar to the crash of '08. Let's get into the interview with Chamath as he lets us know what to expect in the next few months. Don't forget to like and subscribe if you enjoy the content we do here on this channel. Let's get right into the video.
I'm going to connect what may seem two disparate ideas together. But the single biggest thing I think that will prevent nuclear war is the inflation that we're feeling. And the reason is because it allows the Fed, in my opinion, for the first time really in the last 15 years, to act properly. And if they hold the line and they take interest rates to 4 or 5%, I think one non-obvious outcome of all of that is that it becomes extremely expensive, next to impossible, to finance military adventurism abroad. And that's a practical economic outcrop of really, meaningfully high rates greater than zero. And so I actually think the reality is that for a lot of these governments, the more that inflation sticks around, the stickier it is, the higher rates are in general, the bigger the problems at home are, and the less prone they're going to be likely. I actually think that explains the escalation of this rhetoric, because people want to try to make this issue and put it on the table. But you understand that, these folks don't say it's a 90% likelihood. They go from 1% to 25%, which, if you understand probabilities, is effectively a left tail risk that's effectively the same. And the reason they're trying to do it is they're trying to get it back, David, as you say, to timestamp it, to get it in front of people's perspectives, to make it important in a moment where everybody increasingly, not just in the United States, but in the UK, in Europe, are looking internally and trying to figure out how to keep their economies in a reasonably functioning way and how to make sure that their financial and other infrastructure keeps working.
So you're saying...
And that is not necessarily a priority when rates are zero. But when rates are 4%, I mean, just by the way, if you guys saw what happened today, it was the competing of two narratives this week. There was the financial narrative of the UK having to bail out their pension system, right? Of all of a sudden the pensions being forced sellers, of those forced sellers now, spilling into the United States debt markets around CLOs and collateralized loan obligations and junk debt, which then could theoretically spill as a contagion to other parts of the market. That was narrative one. And all of that, by the way, is a result of hiding inflation and the, Fed moving up rates and, other countries being forced to attack inflation with higher rates and creating all these dislocations.
With a recession looming overhead, the question is, what impact will it have on the cost of goods and services in the meantime? Chamath believes the framework for the bottom of the market is being built right now, and in the next 30 days, we could see that come to fruition. The UK is currently experiencing a 40% housing bubble that will cause people's rent to skyrocket 3 to 4 times what they're paying. If this happens, we'll see a major collapse in that market as well.
And if you actually saw the print that was spilled, the disproportionate amount of the rhetoric actually focused on the former narrative and not the latter. And so I think that that's why these folks are escalating the rhetoric in order to kind of create an equality so that they get enough print on that version of the outcome.
What you're saying is you have the world saying, we can't afford to have this conflict. We are broke. We've got too many chaotic issues.
I think the world is saying we are increasingly under enormous domestic pressure, And as a result, we cannot spend on things abroad. If I was a betting man, I would guess that the next $500 billion to $1 trillion that is spent in Western world economies will be to subsidize something that's broken internally inside of one of our countries, whether it's the UK pension system or whether it's the high yield credit markets, and it will not be to finance military adventurism. Whoever thought it was a good idea to allow pensions to run levered risk it's obviously insane. Could you imagine if it turned out that the teachers' pensions and the firefighters' pensions in America were running levered long? I mean,
they are.
They're not.
This has to get resolved now. I mean, it's just we're at a breaking point.
No.
Yeah, it's clear.
You know what a pension is?
I know. I'm not trying some fancy.
It's just a debt instrument.
No. I'm saying.
That's all it is.
I'm saying don't use some fancy intellectual argument. I'm saying practically speaking, the treasurer is not allowed to call Goldman Sachs and say, I'm going to run 2 turns of leverage on this money. That is not allowed to happen in the United States, okay? I get in some fancy way it could be thought of as levered long with, all kinds of indirection, but that is not how the world works today, practically speaking. It is how the UK works. A treasurer in a UK pension system is allowed to call an investment bank and actually run levered. That is insane, okay? So my point is, when rates are non-zero, all of that jig is up. Governments are forced to batten down the hatches and, husband cash. And I think that is, and as disruptive as that is, it may actually be the bulwark against war.
The jig is up, folks. I think that's what we should take away from this is we can't afford this, and the United States is funding it. We have to force a settlement here, and it would be a profile of courage.
And that may be the silver lining of inflation. We are enormous beneficiaries of having been born when we were, because we are a bunch of late 40 and early 50 somethings that in the prime of our career
42.
in tech, the Federal Reserve took rates to zero. And we had no idea a priori how important that would be in all of our outcomes, but they were.
And even more importantly, PCs, internet, and mobile happened.
All of that hard work was done beforehand by an entire cohort of people that had to fight much stronger headwinds than we had to fight. So, David, I just want to build on that. Like, we were extraordinarily lucky. And so don't get caught up in that, because there's all these factors you cannot control. These companies are going to go through a very difficult moment, which again is the reason why a good steady hand who knows what they're doing will make a ton of money in this next cycle. There are moments when what we do reflects in value that frankly where we are over earning. And then there are periods where what we do is under reflected and we are under earning. And so the through line has to be that you need to survive in both good times and bad times, which means you got to like what you're doing. And if you get caught up in a numerical number, there's all kinds of math you can do to make it look a lot bigger than it is, but it's all meaningless.
The following months will serve as a clear indication of what to expect from the stock, crypto, and capital markets, despite the fact that they may currently be driven by fear. The regular consumer will be the one most impacted by this recessionary environment, and the credit and housing markets' financial corrections are another issue to watch out for. Loan interest rates are rising quickly, and Chamath thinks we could be witnessing a bubble there as well. What do you think about the current state of the market, and how do you believe it will impact the typical consumer? Comment down below. Thanks so much for watching. Don't forget to like and subscribe. This is Library of Wealth. We'll see you in the next video.